Cathy, what are you telling your companies about how long to plan for this kind of market volatility and how to navigate it?
Hi, Emily. It's so great to be here, first of all, as always. What confusing times we live in, right? Everyone is trying to make sense of it all. And I'm super happy to be here today to share my perspective as a venture investor. Now, I think the word everyone is using today, including myself, to describe the current approach to the market is uncertain. About half of the NASDAQ had valuations slashed by 50% in a matter of weeks. And uncertainty is really the foe of the markets. This turbulence is creating a very, very confusing fundraising environment for tech entrepreneurs and for investors. Frankly, no one knows what's going to happen, right? But because no one has the magic ball, there are certain ways that founders can prepare themselves, even though we don't know when the other shoe, so to speak, will drop or how far it is to drop.
How is this impacting valuations? It certainly seems like things have taken a pause, if not some companies maybe having to take a haircut if you're trying to raise money right now.
Well, you know what? Private markets for software companies, and I focus on software companies, so other markets might be seeing different things, have not yet meaningfully corrected. I am hearing some anecdotal stories about lower valuations and some retrades in later stage deals, but there's not been a lot of discernible pattern yet. Frankly, the early stage also seems to be quite insulated at this point in time. And I think it's important to also call out that there is a lag between public market movements and the private markets. And we haven't felt the full impact yet in the private markets. Now, this lag has been seen in prior cycles as well. In the dot-com crash, during the Great Recession, this time there's also just a massive amount of dry powder on the sidelines. I think over 100 billion was raised last year by US venture capital firms alone.
So given the amount of dry powder, do you think that we won't necessarily see as dramatic an impact on private markets that we would had all that money not been raised?
It's definitely a counter force to what's happening in the market. But you know, my prediction is that we will see an impact in the private markets, first with the late stage, which we're kind of seeing already. But usually these things take a quarter, 2 quarters, maybe 3 quarters to see, and it will hit the late stage companies first, flow into the mid sector, and then hit the earliest stage companies last.
So what do you see is coming next? If you could sort of map out the second half of the year, what are you planning for?
At the end of the day, what we do at Sapphire is striving to back the most exceptional entrepreneurs and companies of consequence. And regardless of what's happening in the markets, following that North Star of investing in absolutely the best teams and companies, I feel will cut through the volatility in the longer term. Now, what I'm telling my CEOs are there are certain things you can do to protect your business in case the fundraising markets tighten up for the rest of the year. These are things like making sure that you have enough cash on your balance sheet, right? Taking care of your current customers. It costs way more to acquire a new customer than to retain an existing customer. And also don't forget about retaining your employees as well.